Futures point to a higher open on the back of European trade as the Bank of England and ECB leave monetary policy unchanged. Economic data include jobless claims, natural gas inventory, while Smithfield and Williams-Sonoma headline the earnings calendar. I'm Taylor Schranz, and the morning call starts right now.
Good morning, I'm Scott Rudler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrina with The Street, and together we bring you the Morning Call Express. Good morning, everybody. Before we go into our trading plan for today, Scott, let's review some SPX levels from yesterday.
Yeah, yesterday we came in and the market was very oversold. Tuesday, you had the biggest down day of the year. The oscillator was down to -80. So yesterday, you thought that we can get a bounce, and the Dow was up almost 80 points. The NASDAQ was up. Certain stocks looked decent. You know, some constructive action. But today, I think, is a little bit surprising.
So going to our trading plan, are we going to remain flat for the week? We have that big jobs number coming in. So do you get a little bit, cute here with your trading, or you just stay the course?
Well, it depends if you want to be cute, short-term momentum, which is what I try and do, or you're a macro investor. If you look here at the chart of the S&P, you will see, two trends again, like we've talked about. This macro trend that we've been following hasn't even been tested. So if you're a longer-term investor, multi-year, multi-month, you had absolutely nothing to worry about. On the short term, though, if you ride this trend like I've been trying to ride since December 20th, you had to get a little flexible, get out, maybe get short, and then see where we would hold. Overall, we held 1340, we held a 25% retracement, and now the question is, can we retake this area? Okay, we're opening right around 1360, 1364, retesting that 10-day moving average. I would say if you're a trader, a momentum trader coming in flat, do not go and chase the open here. Don't go buy the open after yesterday's move, today's up move. I think you try and fade it, but if we hold above that 1360 for about 60 minutes, then just don't be stubborn and let things kind of sift out.
Right, moving along to the sector spotlight, what Scott and I do, we look for outperformers and trends. We're going to look at the retail names, which continue to hit 52-week highs, and they just keep breaking through. That momentum trade is right there. We're going to look at the RTH, which is the ETF, Lulu and Macy's, which both received some upgrades.
Yeah, so if you look at the RTHs, you want to find relative strength. That's what we do as traders. Look at the indice here. It did not even go below the 10 or 20 days, so that was a sign of strength. If you look here, this is the 10, 20-day moving average. You saw the S&P below it. You saw other sectors testing their 50. So retail is the place to be. And retail right now, rightly so, is making new highs. If you want to talk stocks, Lulu, high beta name within retail, still looks good. Had a nice breakout, held support. If you bought that dip, congrats. And even a slower name like Macy's, look at that. Above the 10-day, above the 20-day, looking like it's going to break out. This stock can get some momentum here. Once it clears, this should say, 39 areas. So there's still a lot to do, a lot to be positive about. Right. So just don't have short of the brain or opinions. Let's let the market tell us what's going on here.
A lot of questions that we get are, how do you play a flat market? Where can you pick some stocks? So what we're going to take a look at today in the trenches are some rotational names as we go into some high quality, oversold names. We did this play with P&G back in January, and it performed really nice for us. One we're going to focus on today is Boeing, which happens to be the most oversold name.
This is a great example because it shows you have to know your time frame and what you're good at. I tried being long, Boeing. It was too slow for me. I couldn't handle it. But as an investor with a longer-term time horizon, it's acting just fine. And if you look here at the chart of Boeing, you will see that it did pull back. It did hold this longer-term uptrend. So if you wanted to buy some on this dip, fine. And I think with time, you're going to get paid. If you're looking for momentum, you're looking for speed, this is not the place. If you're looking for some dividend and safety, perhaps that's a spot for you.
And in the long call version of the morning call, we're going to take a look at some quick hits for some quick cash. But before we wrap up, let's take a look at Apple following the iPad event yesterday.
It's always funny with Apple. They always try and sell the event. And there was a cute trade there. It was up 3. The news came out. It went from up 3 to down 5. So if you're an active trader, you made some money. But overall, it feels like every sale in Apple is bad. And if you look at the chart of Apple, you will see, I see another type of pattern developing here. I see a wedge type pattern. As long as Apple short-term stays above this 20-day moving average, I think you could stay with the momentum. And if it starts to clear this just a 545 area, you're going to see new highs. And I do think investors will see 700 at some point this year.
Okay, great. We'll take a look at the end of the day as Scott and the team recap the charts on options, profits, real money, and T3Live.com.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.